So recently, Matt, we've seen rate reductions, which you would think would be good, and it's going to make things, I would think, for a short time, a little more affordable for buyers until prices hike, because we know that's what happens. But let's talk about purchasing a home in this new rate drop environment.
It's important to know that mortgages are a part of the commodities, which is there's a lot of commodities that banks lend to their customer bases on. So there's mortgages, there's car loans, there's credit cards, there's, the list is endless. Small business loans, personal loans. So mortgages is just a piece of that bigger pie that banks are lending out, and they're borrowing money from the federal government to accommodate all of these commodities. So,
Mhm.
to your point is that, the Fed rate reduction, it's great and it can reduce the cost of living. But when I say living, I define that term as all of the things that we spend money on, not just mortgages. And sometimes mortgages don't have that direct correlation with how the Feds lower the interest rate. When the announcement came out, a lot of my customers, if not all of them, were like, "Hey, what's my new interest rate?" And unfortunately, it doesn't work like that. And banks prepare for rate reductions from the Feds, where they build it into interest rates on a gradual basis. And there's a reason for that. One major reason is that it's a way to control the volume. So if all of a sudden one day interest rates were just a half a point lower, that would cause a surge of loan applications and a volume surge that's like really, really difficult to handle. So moving forward and navigating today's market as a buyer, it's important to know that this happens over time.
What are your thoughts about the fact that, we still have a supply situation where there's not enough supply and there's a lot of buyers out there? Do you feel like, with lower interest rates and more buyers hitting the market again, do you feel like we're going to see a drastic price appreciation going into 2025?
I do see that. So the Fed reduction, because it's lowering the cost of all these other expensive things that eat up a monthly budget,
Yeah.
bringing the cost of all those items down is a benefit to be able to purchase a home, because they can afford now. It's not like they have a super high car payment and a super high credit card bill and super high this and super high that, and now they have a high mortgage payment. Because of that, it will get more competitive. I envision that 30,000 to 35,000 number of qualified renters that are out there will expand, because now you can afford more. Some folks that can't qualify will now qualify simply because they can afford now to get pre-approved and whatnot. So
Yeah.
I do see that coming, and with more competition, you'll see how the price of houses go up, because you'll have you'll have more offers, and it will just push the price of houses up. Some folks are calling me after they're pre-approved with another bank to shop interest rates, and it's really, really difficult to lead with that, because that if you're that person, you have no business looking at interest rates, because you're not under contract to purchase anything.
Hmm.
So before you find a house to buy and you're talking and you want to have multiple conversations, as you should, to decide who you're working with, you're really shopping for customer service. You're really shopping for education. You're really shopping for loan product.
Sure.
Whether that's a 203K, an FHA, a VA, or conventional, like, you're shopping to see which loan product you want to work with, and you're picking your team. It's kind of like dodgeball. It's like picking a dodgeball
Yeah.
team. It's like you pick who you want on your team to be able to win, and you should be shopping for customer service, availability, who's going to get back to you, who's going to help you learn about what's going on. Interest rate, really, you can't have a conversation with it, because any person that's in a position to give out an interest rate where you don't have a house to buy yet is just going to lie about whatever rate that is, because you can't guarantee the rate until we know when you're closing and what you're closing on.